What's going on YouTube? Welcome back to Practical Investing. I hope everyone is doing well. In today's video, I'd like to cover one penny stock that could potentially explode and why I think you should be adding this stock to your watch list immediately. Before I hop into this video, if you are new to this channel, you are going to want to subscribe as I talk about the hottest stocks and always get straight to the point. So please consider subscribing and turning on your post notifications if you like channels that don't waste your valuable time and get straight to the point. Remember, none of this is a buying suggestion or financial advice. Always conduct your own research prior to investing. With that said, let's get right into this video. So the stock in today's video is ESE Entertainment Inc. Ticker symbol on the Canadian TSXV is ESE and on the US OTCQB is ticker ENTEF. There will be a link in the description if you wish to learn more about this exciting company after watching this video. Keep in mind this is a sponsored video, but all of the opinions are of my own. Now let me fully break this interesting company down and near the end provide my overall thoughts. So if you didn't know, esports is in the midst of a generational boom, so much so that according to Grand View Research, the global esports market size was valued at $1.1 billion in 2019 and is expected to expand at a compound annual rate of 24.4% from 2020 to 2027. Guys, that is insane, okay? Not to mention, most of this revenue is projected to come from brand investment revenues, such as media rights, advertising, and sponsorships. Astounding, right? Esports are everywhere you turn, and the growth is undeniable. Nearly half of the world's roughly 7.7 billion people are gamers, according to Financial Post. The gaming industry is also now a more significant moneymaker than sports and movies combined. Guys, that is insane, okay? Many esports pros also now earn more than championship-winning professional athletes. Let that sink in for a minute, okay? Yes, it makes sense then why professional sports teams and major car brand teams are jumping into the space and gamers are now seen as legitimate athletes, especially in Europe. But there's a severe gap in the marketplace. Limited tournament infrastructure and less number of organizations have restricted the market growth, also according to Grand View Research. That's why ESE Entertainment Inc. may not only be the most critical and groundbreaking company in the sector for the short term, but because no dominant infrastructure company exists powering esports like ESE, this company might be the best way to play on the sector's skyrocketing long-term potential growth. You see, when it comes to esports, let's be frank, people don't fully understand the sector and are often confused. Fragmented channels have made it difficult for esport companies to generate revenue compared to traditional sports with a lack of standardization, unlike a traditional sports league, and difficulties to secure rights on behalf of teams. There's also a lack of permanent digital and physical infrastructure for supporting events and massive difficulties managing global broadcasting and advertising channels. Guys, while its message as the most prominent esports infrastructure group in the world may not be the sexiest, let's make one thing abundantly clear. As the nuts and bolts behind one of the most significant and rapidly growing industries globally, it provides essential services to big game publishers, powerful companies wanting to get involved in esports, and so much more. Simply put, as the pick and shovel behind gaming and esports, ESE may be on the path to generating the most revenue in the skyrocketing space. It might not even be close either. Before diving deeper into the company, let's look at ESE's chart and compare it to other industry players. In the last 52 weeks, the ESE stock moved from roughly 16 cents on September 29th of 2020 to as high as $4.58 on March 3rd of 2021. This is an astounding move of around 2,675.76%. While the stock has since then pulled back, it may be trading near oversold territory based on its MACD oscillator and the 14-day RSI as of July 25th of this year. It may also be trading at a mouth-watering undervalued level below its 200-day and 50-day moving averages. Not to mention the company's 100 to 200-day MACD oscillator may be a long-term bullish technical signal. Couple this with a tightly held capital structure with insiders holding about 45% of its shares, you have a company built for massive moves and potential success. There's enormous potential for robust movements when the stock has volume because of how tightly held it is, along with its public float of about 17.1 million shares. Look, folks, ESE has a proven business model and they've executed everything they have said they would, especially in 2021. With more cash than debt on its balance sheet for the quarter ending in April 30th of this year, ESE provided some eye-popping growth statistics, $716,000 quarterly revenue with over 350% increase over the prior quarter. Quarterly revenues of $716,000, which compares to $42,000 in the year prior, and the total assets of over $6 million compared to $842,000 in the year prior, which was in 2020. Furthermore, on July 19th, ESE completed a bought deal public offering that saw gross proceeds of roughly $8.6 million. The company only raised about $5.9 million to date, but with this newly injected net of $7.8 million from the bought deal financing, the company is expected to further improve capital stability to support business growth and allow ESE to execute on its existing M&A pipeline. Not to mention, the next 12-month run rate should be about $20+ million. Other companies are burning much more than this per quarter. The company has made several milestone acquisitions, which those financial figures don't even include. What's even more is that the significant revenue potential in its acquisition pipeline, the fact that the company is trading at this level is absolutely shocking. Some of these game-changing moves include the following. So on January 2021 of this year, ESE completed the acquisition of Kick, a worldwide recognized and respected esports brand. Finalizing Kick's intellectual property acquisition started ESE's path in 2021 to become the next big esports brand. On top of this acquisition, ESE partnered with global fintech leader and Canada's largest private and non-bank payment processor, Nuvi, to sponsor ESE's Kick esports team on the 2021 season. On April 12th of this year, ESE completed its acquisition of World Performance Group Limited, an esports gaming and infrastructure company. The highlights of this acquisition include the following. Completing the transaction expanded ESE's esports infrastructure services globally, bridging esports companies with their fans and customers. Also in 2020, WPGs generated more than $14 million in revenue. And on May 13th of this year, ESE signed an LOI to acquire digitalmotorsports.com. This Irish company provides infrastructure, technology, and support for auto simulation racing world. Now, these moves look even more enticing when you compare ESE to some other players in the field. Many of these competitors are trading at higher multiples without ESE's broad potential to shape and grow the esports and gaming industries. In short, ESE may only be scratching the surface of its potential. Enthusiast Gaming Holdings is an excellent way to see the scale of the industry. Its market cap grew from about $94.54 million on June 30th of 2020 to about $651.52 million as of July of this year. However, this company is not diversified like ESE and depends on gaming activity. It does nothing behind the scenes like ESE to provide the infrastructure for esports. Not to mention, Enthusiast Gaming missed big on their last 3 EPS estimates. Now, because ESE is so hyper-focused on profitability and creating a sustainable business, comparing ESE to other companies really does not do them justice. Now could be the very best time to look into them before they potentially break out again as they did earlier in this year. Now here is why ESE Entertainment could be the most special company in all of esports. So founded in 2019, ESE Entertainment is a company unlike any other gaming or esports company in the world today. It's becoming a dominant player in esports and gaming through a 360 approach, leveraging current assets, strategic acquisitions, market expansion, and technological innovation. The company is diversified with valuable resources, including physical venues, media infrastructure, teams, leagues, and international distribution partners. It also has a unique niche in the robust European market. Europe is unlike any other esport or gaming market in the world. You'll see esports players on billboards, packed stadiums, and gaming stars discussed and revered on the street amongst ordinary people. Gaming and esports truly have a vibe of their own in Europe. The company is focused on 3 core business lines: technology, infrastructure, and gaming franchises, all while partnering with some of the largest companies in the world, including Red Bull, Orlen, Porsche, LG, Neosurf, and Nuvi. ESE not only provides software for events and tournaments and physical infrastructure and broadcasting capabilities on the infrastructure side of things, it also possesses existing global distribution for esports related content, a growing gaming franchise that includes professional teams, and tier 1 advertising, sponsorship, and business partners. So here are my top reasons I am watching this company. The first reason is Grandview Research says that the global esports market size was valued at $1.1 billion in 2019 and is expected to expand to a compound annual growth rate of 24.4% from 2020 to 2027, but limited tournament infrastructure and less number of organizations have restricted the market growth. That's where ESE Entertainment Inc steps in. The second reason is that other esports companies may have their own niches and operations, still no dominant infrastructure company exists to power esports like ESE. And the third reason is that with core business segments in technology, infrastructure, and gaming franchises, is ESE has a robust distribution network through massive media conglomerates like Polsat and partnerships with some of the largest companies in the world like Red Bull, Orlen, Porsche, LG, etc. As I mentioned in the beginning of this video, I will drop a link in the description so that you can learn more about this exciting company. Keep in mind, this is not financial advice and this video is just for entertainment purposes. You should always conduct your own due diligence prior to making any investment decision.